welcome to the Building and Growing podcast. We're delighted to have Colm Lyon, the founder of Fire, with us. Welcome, Colm.
Thanks, Lucas. Great to be here.
You're most welcome. Thanks so much for joining us, and glad we could shoot in London.
Yes.
Wasn't able to find a studio in Dublin for us, but lucky you're out here.
Yeah, no, it took us a while, I think, to get this together, but it's great to be here. Yeah,
That's it, indeed.
Yeah.
Well, look, Colm, you've got a fantastic story, and I think it's best for me to hand over to you to introduce yourself, and feel free to start from the beginning.
Yeah, I guess if I was looking at what I do today, it kind of falls into three maybe different camps, right? Fire, which I'm sure we're going to talk about, as a digital payments business that I founded and own and run. And then we also have our own family office where we make early stage investments into a whole range of different companies, about 22 different early stage businesses. And we're limited partners then in a range of different Series A funds as well. And then I work a lot in the area of policy with regard to payments.
Yes.
And sort of helping to ensure that the environment is not constrained or restricted in terms of new entrants coming into the payments market. Mm-hmm. So I have a particular interest in that area of things. So they're the three kind of main, I suppose if I was dividing up my week, if you like, they're the three kind of pillars that I would be involved in. But I've always been involved in payments right from the early stages. So
Yes.
right back in 2000 was when I originally left my first job, if you like, and decided to venture full-time into the world of payments and set up the first business, which was Realex Payments, which is a payments gateway business, which we built and grew up until we sold it in 2015. And that was kind of, and then since then I've been, as I say, operating as a kind of a early stage investor and policy guy, and then now with the second, if you like, major company that we've created, which is Fire. So a payments person, I guess, lock, stock and barrel, you could call me. Yeah.
Indeed.
Yeah.
And look, I mean, opening up a payments business in the 2000s, when internet penetration wasn't anywhere near as high as it is now, it must have been a completely different market.
It was a strange time because I left my job and my friend of mine gave me a graph and he showed me the NASDAQ index in March 2000 when I left my job, and then he showed it to me in November that year, and of course it just crashed.
Oh, indeed.
And it was one of the worst times. But I mean, it was pretty clear back then that online commerce was going to be real.
Yes.
And when you saw the first snippets of that occurring, and you saw people in Dublin or Ireland being able to make their own CD at the time and with their own songs on it and have that CD shipped to their house.
Yes.
And you realise that the world was incredibly small from a commerce point of view, and therefore businesses were going to be opening up access to new markets, very easily through the internet. And the one thing they had in common, they needed to get paid.
Indeed.
And I think the world of card acceptance wasn't quite ready for that, because cards were kind of, they were used to kind of, in a face-to-face world or in a retail world.
Yes.
And so for the cards then to transition online, it gave rise to the need for companies to sit between the retailers and their banks, if you like, or their processors.
Yes.
Gateway businesses, aggregators, people who made it easy for businesses to accept cards, and also made it easy for those acquiring banks to be able to accept and to onboard those merchants who were selling online. So you were satisfying the requirement of two people, as you like, at the one time.
Yes.
So for that reason, it was like, it scaled to be a big gateway in the end. We were processing over 28 billion a year in value for about 12,500 clients.
Wow.
Including some, of the world's largest brands.
Yes.
And it was a couple of acquiring banks, as they're called in the trade, who were white labeling the platform as well. And so it was a great, very successful venture, and really simple, helping people to sell online, helping them to get paid when selling online.
Indeed.
It just worked, it was great.
That's it. And I think that's the beauty of B2B, when you're able to solve a problem really well. It's sticky. And, I mean, certainly in your case, led to a fantastic exit.
And there's a simplicity to it too, which really works too. If the model is that simple, that I want to, and I think the distribution channels that we found as well through the partnerships that we developed, meant as well that it was that we didn't have to go and find every retailer ourselves, because those retailers were already there.
Yes.
And working with third parties, and we just had to enable those third parties then to integrate on behalf of the retailers,
Indeed.
And so it was a great lesson. But yeah, no, it was it was great to see that, subsequent to the sale, that many of the people within Realex Payments became and remain as very senior people within Global Payments, which is the company that bought us in 2015.
Fantastic. Yeah, it's a great success story. And, as you alluded to, a great example of a kind of a B2B2B business, where you're taking a one-to-many approach, through distribution partners. Yeah.
And there's some, you were able to add on over time then some additional services too, so as well as the card author. And it was never really about the card authorization. That was kind of almost like a given, but it's, what we learned at that stage was that you don't mess with the checkout page for a retailer. The checkout page is a really important page. So the simpler and the better and the smoother and the best user experience that you can provide on a checkout page is really, really important.
Yes.
There are some merchants that we used to use colourful language to describe, like, don't mess with my checkout page, because like that was, we don't want to complicate that process, because we've got the customer this far. We don't want drop-offs at this point in time.
Yes.
And then you find as well that what was really important for retailers was the reconciliation. And that was nearly more important in some cases, because if you made the reconciliation process messy for them, they were very upset, because now they had to have people there trying to work out which sale was which payment relates to what sale to what order and this type of stuff. So the reconciliation became a really important part of that solution as well. And then things like dynamic currency conversion, we're able to give the retailer the opportunity then to, if somebody's using a card in a foreign currency, you can give that customer the opportunity to pay in their own currency rather than the currency of the transaction,
Indeed.
And there was an income stream for the retailers in that situation. And then, fraud management as well, because obviously in a card not present situation, there's the, potential for fraud. So we could develop then additional solutions that allowed businesses then to be able to manage their fraud in a more holistic way. So you start to build up all those features, and then you realise this is a good, holistic, comprehensive solution.
Yes.
And I think the retailers really liked it, and the acquiring banks that we worked with liked it as well.
Indeed.
And it was and then the quality of the retailers that we onboarded were really tier one retailers. So we were very happy, and the volumes were great. We used to be up to like millions of transactions per day, and it was like a fascinating, except for when we had a big outage one time, and that was
oh no, she was
that was really interesting, because as we were coming into the real growth years, we had a really bad outage for about 6 hours one day, when the those server arrays that you have and the disks and somebody said that they're hot swappable, and we believed them,
Oh no.
But of course, out comes one disk, and the firmware was inconsistent between the old and the new, so the whole thing just collapsed. And it took us 6 hours because the backup site didn't work and all this type of stuff. And
she was,
as our COO said at the time, though, you can't waste a good crisis, right? And so after that, we built infrastructure that allowed us to run, because this is before the cloud.
Yes.
Think about it. And we built two data centers that we had, and we built them in a live configuration.
Okay.
And we were able to replicate in 20 milliseconds everything between the two data centers.
Far out, yeah.
And we had N+2 in each data center. So we were able to take down an entire data center, and we wouldn't lose a single transaction.
Excellent.
And so we built a highly resilient system, on the back of that crisis.
Yeah. I mean, a great learning. Probably one of the first, I guess. Data crises back in the day.
You learn your lessons.
Indeed.
And I remember the customers being really lenient with us, I suppose, in a way. We the communications was another lesson, like that. The communications are so important when you have a problem like that.
Indeed.
Tell your customers, that you've got the problem and that it's at your side, and so on and so forth. And,
yes.
and then you get it back up. But yeah, it was a long 6 hours.
Indeed, I can imagine. But you live to tell the tale.
Yeah.
The company survived.
Yeah,
it, so
yeah.
That's what counts.
Exactly.
But
Yeah.
Colm, thanks so much for that introduction, both to yourself and also at Realex as well. You mentioned that, right now you're focusing on three main things: fire, the family office, and, the boards that you sit on. It'd be great to dive into fire.
Sure.
This is the second business that you've founded.
Yeah.
Tell us, what...
I often get asked why. Why are you doing this, It's a great question. I think fire for me was a long time coming, right? It was something that I was really, really interested in. And it was part of Realex Payments at one stage. And it split out then as part of the deal. And at that stage, it wasn't earning any revenue. So it was still a concept, if you like, at the time of the deal. And I think, like, what really was, for me, was the big fascination around it was that the payments were changing, and the way that people pay and get paid is going to change further. And it's really driven by the mobile technology that you've got. And that a couple of years ago, everybody went to bank branches or whatever to pay their bills, and then they went online, and now they've got their mobile phone, and now you've got, I don't know, I think the last time I did an average of 2 or 3 accounts that everybody has on their phone.
Yes.
Right. So people don't have one account either. They've got multiple accounts, and they can pay from these accounts, right? And just as easily as you tap your card, you use Google Pay or Apple Pay to tap a card transaction, there's no reason why you couldn't just tap your phone and pay from your account.
Indeed.
Right? And completely bypassing all the, if you like, the card network in effect, and just moving money from one account to another, right? From your account to the retailer's account. And I'm not too sure what the final shape of that will be, which one will win and how it will win. And you can see them all over the world emerging. But it is inevitable, I think, that that payments will, not all payments, right, but an element of payments will migrate and be account based into the future. And so my interest was, if that happens, retailers and indeed card acquirers, who are the traditional people who help businesses get paid, right, as the card acquirers, they're going to need infrastructure, and they're going to need services like what Fire has. And so what we try to do in Fire is we try to concentrate on the retailer side, on the side of the person getting paid, was the payee, basically. And we try to make it easy for the merchant, for the retailer then, to get paid in this way. And that for me was like, it opened up a kind of a whole host of different kind of use cases then, because to do that, we needed to be an account provider. So we needed to provide what we call clearing interoperable accounts, right? So in other words, we need to provide accounts to our customers which work in the clearing system. They have to have sort codes, account numbers, BIC and IBANs associated with them, just like a regular bank account. But we're not a bank, so we call them payment accounts or digital accounts. And what we do then is we realize then that with that account there was a whole host of other services that merchants were looking for. So again, thinking of the business, and the business wants to get paid, but then often the businesses want to pay out as well.
Indeed.
And they want the craving for, I suppose, digitalization is just so intense right now. It's kind of, everybody wants to, they don't want people, they just want to automate the process. So I know that it's all working. I'm getting my notifications, I'm getting my alerts, whatever it might be. And I know the money's, and we've got many, many clients now who never even log into Fire.
Okay.
The money just comes in. Our webhook will call them and tell them they've been paid.
Yes.
They'll send back instructions to us as to what to do with those funds, and all the funds are gone. And it happens in seconds, and it works,
Yeah.
And so I think for me, I was really interested in just this next generation, this next wave of payments, and particularly in the UK and in the Irish market and further afield in Europe as well. There's a real, it's a transformative time, right, with everything, because as well as the technology, I think that's changing, the regulation is also changing. And the regulation is opening up access to the account, and once third parties like ourselves can gain access to the account, well, there's a whole host of services we can then put on top of that with your consent, to make that experience a really nice experience, and to enable you to do things that maybe you can't do with your traditional account. You know?
Indeed.
So yeah, so I think it's a it is a landscape full of opportunity right now.
Yeah, absolutely. And look, earlier on you mentioned that I suppose the open banking,
Yeah.
albeit with different names or forms, has emerged
Yeah.
globally. I know in Brazil they have the PIX payment system, which is effectively open banking, and it's surpassed credit card payments. I guess the dynamic there might be a bit different because people may not have always had access to
Yeah.
credit cards and cards, but certainly here I make all of my business tax payments through open banking, which is fantastic. But you talked, I suppose, about a few different use cases there. Could you talk us through who your ideal customers are for open banking solutions and, say, account-to-account payments?
Yeah, happily. I think the customers that we're seeing, and again, you have to think of it from a point of view of the merchant or the retailer, right? Because they don't necessarily come and say, I want open banking payments, right? They'll often come and say, I'm having an issue, I'm having a problem, I'm not happy with the way that I'm getting paid today. It may be to do with expense, it may be to do with fraud, it may be to do with reconciliation, it may be to do with accessibility of the user experience or whatever it might be. And so what you tend to do is you tend to try and work with those customers to try and see, well, how can we help with that? Mm-hmm. And is there something that we can do? And I think open banking is really interesting in that the user journey, it's new, you see, as well, right? So we can't say that it's, our chief product officer, Owen, has a great expression where he says, open banking is not going to get any worse than what it currently is. It can only get better, right? And this is true. And I think the businesses that we're seeing are typically larger corporate and enterprise type businesses, right? So there would be larger companies that are looking at this and saying, if we implemented this, and if we got 5%, 10% of our traffic, migrated away, we can maybe take more control over the user experience. Yes. We can collect less information from the customer because the customer doesn't need to, enter any details. Everything's pre-populated for them, and potentially we can save money. Yes. on these transactions as well. So in that situation, the volume might say, well, that's a good thing, right? I can do this. There are differences between card payments and open banking payments, and it would be wrong to think that open banking payments will just take over card payments. They won't, and there'll always be a time when people will use their card and merchants will want to be paid by card. Yeah. And there'll always be a time where open banking might happen to work a little bit better for people, and that's that. So it's kind of horses for courses is the way we would describe it, that they pick out the best one. Yeah, but these large corporate clients, large and enterprise clients as well, we would work with acquiring banks. Mm-hmm. So, and those acquiring banks have hundreds of thousands of retailers. Yes. Who currently get paid via card. And what they'd like to do is help those retailers now get paid via open banking. So what we can do in that scenario is we can help the card acquirer to go to market with an open banking payment acceptance solution. And that's something that we do quite a bit of. And then the large, as I say, the large enterprises are really driven by, it typically is a combination of either cost saving, user experience, and I think as well as that, they kind of feel that there's an element of it's novel for them, right? And they want to be in that space. Yeah. So because I think there's as you mentioned, PIX and you see UPI in India, and you see Ideal in the Netherlands, and you see Swish and Bizum, and you see all these payment methods coming out, which are account-based payment methods, not necessarily based on open banking standards, but they're still account-based payment methods, right? And you see those coming. I think people feel like there is an inevitability about this, right? Yes. And so the sooner I kind of get into it, maybe the better, even if it's just to learn and to understand a bit more. What does it mean for my reconciliation process? What does it mean for my data flows? What does it mean for my settlement? Will I get the money sooner or later than a card transaction? Will I know that the money's definitely in? Yeah. So they've all these questions that they want to learn, because I think, for me, it is an inevitable trend, and I don't, no one's going to reverse it now, right? And right across the UK and in Ireland as well, and Europe, the account-to-account based payments, everybody's talking about it. Everybody wants to, see what's happening in it, and yet it's still terribly disjointed and unconnected, with lots of different kind of solutions popping up here and there,
Indeed.
But fundamentally underneath it, they're kind of the same. They're underpinned by the legislation, which is PSD2, which allows people, third parties, to be able to, as I say, access your account and with your consent, be able to make a payment from your account to somebody else. Yeah.
Excellent.
So it's a great thing, it really is.
Indeed. And look, I guess open banking, it's all about collecting that money. You mentioned before that you've got clients who use Fire, who they collect the money and then payments are made sort of straight away. So you're able to talk us through disbursements and what they are?
It's funny, there's a good percentage of retailers we have found, was a higher number, maybe 25%, who actually get paid and then almost instantly have a need to do something with those funds. So it's kind of a disbursement is necessary, in other words, for them. And that is, what's really important for them is it has to be integrated. So they don't want to be logging in. It's kind of like years ago somebody said to me, how come when I go to a restaurant, Google will tell me I was here 2 years ago,
Yeah.
But if a lodgement comes into my bank, I have to log in to find out. Now, this was a few years ago. I think most banks now do send you a notification. Well, maybe they don't.
Some of them don't. Some of them don't. Or it comes a day later.
Yeah. Or you get a letter. So it's interesting that the need to. So you want, businesses want to be digital in their payment processing. So they want, they really want to be able to say, and obviously central to all that is an API. So having an API accessible solution is really important for these companies. Getting paid via open banking, our card is fine, that the money comes into the account. I might need different accounts. So I might need to create different accounts for different channels that I have, different products that I have, different territories in which I'm selling, different branches maybe, right? So I'd like to be able to separate out those funds. So again, an aspect of going digital with your payments means being able to create these accounts, and being able to create them instantly, right? So I don't have to go through an onboarding process. Very important for businesses. So creating accounts instantly, then using the API, and the API is two-way. So the API has to work that a business can call us and extract back out data or give us instructions to make payments on their behalf. But also, if something comes into the account, we need to be able to tell our customer. So we call those the webhooks. And these are like event-driven. So I can see Lucas is using his card in an establishment today, and I'm the CFO, and I get a notification to my phone or whatever it might be, or an API call to see. So we can do webhooks for anything that happens on your account. So every time a card is used, somebody logs in, whatever it is that you need, typically when funds arrive. So the typical use case for us is many of our customers use traditional card acquirers. They get paid by card. So they're using all these card acquirers, and they have their websites. They're getting paid by card. The money comes into Fire. Our webhook will call them, and they will instantly send back instructions to us to disperse that money. That could be tipping for staff. Is a very common one. We've got a number of platforms that use us, tipping platforms that use us then to, when you go into a store and you tip on the separate machine, because it has to be separate from the merchant's cash flow, if you like. And in that scenario, the tipping company, the tipping platform, will collect the money into Fire, and then once a week or every day, whatever their arrangements are, they will disperse the money out to the staff who earn those tips. You have the same for often merchant cash advance companies, who are very interesting companies that provide lending to merchants based upon, and they repay based upon the funds that come in through their card machines the next day. And then what they'll do is those funds will be settled into Fire. We will tell the lender will send back instructions as to how to split that money, and then automatically split the money. So again, it just takes away so much intervention, and it takes away so much manual work.
Indeed.
That it just makes the whole payment experience just goes digital, basically. And often we call it like an integrated experience. So, and you get that integrated payment solution by utilizing the Fire Payments API. That's the key to it, really. And using the API is that's the magic sauce, if you want to call it that really helps businesses to get the advantage and to get the value.
Indeed, fantastic. So, and I think they were very good examples there of the tipping companies and the merchant cash advance companies. Are there any other key industries that use disbursements?
Yeah, we have insurance companies as well, and the insurance sector is one that we've been working with for a while, both to get paid and then also to manage payouts as well. So that works extremely well. And then we also work with, which is some of the largest financial institutions that we have in Europe.
Yes.
So for some of the card acquirers I mentioned earlier on, that we do an open banking payment acceptance solutions so that they can bring that product to their customers. But for other card acquirers, we're actually managing their settlement for them and providing settlement services. So in other words, they're using us to disperse. The acquirers get paid from Visa and MasterCard every day for all of the merchants for whom they provide merchant services, if you like, and card acceptance. And then that money comes into Fire. And again, we then automatically disperse that money out to all the retailers every morning. And this was, we do it. So we're doing that for some of the largest financial institutions, in fact, in Europe now use Fire to disperse money, out to their retailers on a daily basis. So there's very large value of payments that flows through Fire today, on the back of that. And it's amazing because the money comes in, the instructions come in through the API, and the money's gone.
Yes.
And it just works, and that's it. And what that means for this particular client, one particular client, is that their merchants now get paid the next day, instead of maybe 2 days later. So now they're getting, they're getting money faster.
Yes.
And that works for everybody in the modern day economy, obviously.
Indeed.
So it's a good thing to get paid. So settlement is a really important part of it, of doing business, Like sometimes we kind of overlook settlement and reconciliation, and we kind of think it's just about getting paid. And we think about the user journey and the user experience, but the merchant is a key part of that. And merchants will decide what way they can be paid, ultimately, not the payer, And the merchant won't take a solution if it messes up his reconciliation or the settlement processes. They'll always want a process that's digital and integrated, and that just works, happy days.
Yeah, that's it. Yeah. Fantastic.
Yeah.
Colm, during that answer, you also mentioned a little bit about card spend. I think you gave an example. If I went out and spent a bit of money,
yes,
the
indeed.
CFO would get notified of that spend. Are you able to talk us through your card proposition?
Sure. I mean, Fire, because we're like what we call a digital payments business, right? A digital payments company. What we do when a business signs up with us, typically, as I say, a corporate or an enterprise, a larger client, they would get access then through our API to a range of different payment services.
Yes.
So, and that's what the core proposition is. You integrate to us. You can have any number of accounts you like. You can also order and issue any number of cards that you want. And we're principal members of the scheme ourselves. So that way we can provide, the cards in the brand that, is appropriate for these companies. So we provide a card solution. So we also then obviously provide the bank transfers in SEPA, sterling backs. We can pay by direct debit out of your accounts. You can do open banking payment acceptance, and you can also pay out in 12 different currencies. So there's a whole load of different what we call payment services, which are associated with your setup with Fire, and that we can give you access to. The card is an interesting one, as I say, because we joined as a principal member quite early in the evolution of Fire, and that was that we were one of the first, I think, payment institutions to do that. And it was because our kind of philosophy is to try and get as deep into the payment networks and schemes as we can, and not to try and have third parties between us and them, because it just gives us that a better way to manage the solution and to own, if you like, the important components in the payments chain. And but for merchants, what we do is we give them the idea of a Fire card, and the idea is you can issue as many as you need. They're all accessible through the API. So again, really important component that, the API, you'll be able to use the API to block a card if you wanted to. So we have one particular client, which is a personal shopping service, and they have all of their shoppers who all use Fire cards, and those Fire cards are by default disabled.
Yes.
But when the shopper is in the store with your shopping, ready to check out, he'll go onto the app and say it's ready, and our customer will then enable that card in that location for that amount at that time.
Fantastic.
And then as soon as the authorization goes through, we'll send another webhook through the API and say, and then the card is disabled again. And so it's that flexibility, if you like, that you put on top of the debit card that makes it digital. You know, you can get a kind of debit card from anyone, but a debit card with an API makes it much, much more digital. It can now be integrated into my systems, and I can do so much more. I can get better control, better visibility over things, better reconciliation.
Indeed. Fantastic.
Yeah.
Well, thanks for taking us through that. I guess, is there anything else about FIRE or digital payments and you know, particularly API-driven payments that you want to touch upon before we move on further in the podcast?
I think the trend, the big trend from a merchant and from a business, really, from a corporate business perspective, we are seeing we're actually seeing people coming to us now saying they're looking for a digital payment solution.
Yeah.
So it's really interesting that the word itself is beginning to become an industry term, you know, because people say, what are you? And I'd say digital payments business. So what's that? You know, now recently we had a company that provides contractor services, and they needed hundreds of accounts, right? And you know, and so the lady who heads it up came in to me and said, Colm, I need a digital payment solution. You know, a digital payment account. Is that what you do? You know, I said, yes, that's what we do, you know. And it was great because it was like, that people talk about digital payments now. So I think, and it's all about being integrated, right? And the word integrated payment solution. So, like, you know, I think that is the next, for me, the next big development with payments will be, they'll become much, much more integrated and much, much more embedded.
Yes.
Into all of your apps, into all of your, you know, products and services.
Yeah.
And you know, you stopped using the branch network, right? Years ago, and you stopped using checks. And my guess is that you'll probably stop using your banking apps at some stage, because that functionality will just be embedded into other third-party applications that you're going to use, you know. And that, you know, so that's the trend that I see, is more embedding and more integration of payments. Hence, we call them payments are going digital.
Yep, indeed. Fantastic. And I guess, you know, there have been two key sort of stakeholder groups, I'm going to call them, that we've discussed so far. One are the regulators. And the other one, I suppose, is the market, which is composed of merchants and retailers and whatnot. You know, do you see, I suppose, the developments in the payments landscape as being driven more by regulators or by the market?
Oh, God. You know, I'm a free market person, right? So I innately believe in competition. And I think that competition is really, really important. I remember learning that in school one time. Competition is the source of you know, just creation and invention in the market, right? Competition makes you do things, and you react, and you have to react. And innovation is kind of linked to it in a way, you know. And I think access is one of the big words for me, and access to systems and access to schemes is an extremely important topic in my view. Some of the work I do with UK Finance, where I sit on the Payments Products and Services Board, and I chair the Digital PSP Group, and I'm a member of the Strategic Participant Group for the new payments architecture, which is currently on pause, for Pay.UK, which is the central clearing system. And in there, I am very mindful of how small businesses and startups can access the market, you know, because I think it's really, really important that those businesses can, and that there should be like less barriers rather than complications all the time. Now, everybody needs to be regulated, and I'm a big fan of the regulation, and I would support the regulation. So it's not the regulation that's an issue. The regulation is fine because everybody has to comply with the regulation, right? It's how we go about, you know, managing that, and managing the market is very important. I think one of the big trends is that we're seeing here in the UK in particular has been a very heavy regulatory involvement in the open banking payment space. over the last number of years, what happened in the UK was there was an order put out by the Competition and Markets Authority a number of years ago, and that order was basically to tell the banks to make their accounts accessible to third parties, payment initiation service providers they're called, so that people could initiate, and hence open banking payments could emerge into the market. That order was by and large fulfilled and done, and therefore needs to close, if you like. Yes. And so there's two regulators that are relevant in the UK, the FCA, which is the Financial Conduct Authority, and then the Payment Systems Regulator, the PSR, which is kind of an economic regulator rather than a conduct regulator. And they would look after access, competition, innovation, and they would have certain systems that are designated under their control, and that they would then investigate and issue instructions to the owners of those systems to ensure that they're operating to the standard that they expect in the manner in which they want. But over the last while, I suppose somebody said to me years ago, you have to be careful what you ask for. Yeah? And when you have a regulatory-led, as is what's happening at the moment in the UK, a regulatory-led development of open banking payments, we just need to be mindful, is that the right thing that we want to be doing in the ecosystem as a whole? It's not that they're doing a bad thing. I mean, they're doing a good thing with extremely good intentions, to try and progress and to try and encourage and to try and accelerate the development of open banking payments. But for me, the kind of the detail and the design and the dynamics of that market needs to be done by businesses in the sector who try to convince consumers and businesses to be paid this way. Indeed. And ultimately the businesses and the consumers will decide who the winners are, right?
Yes. Yeah.
Not the banks and the regulators, right? It is going to be the businesses and the consumers. And I think from my point of view, I would have liked to have seen a more visionary approach occurring, where we would set out a vision of the market. And maybe, open banking is just one form of account-to-account based payments. Right?
Yes.
And that we would have actually, and we wouldn't have put all our eggs into that basket, but we'd say we want a market where there are multiple account-to-account based payments, where these payment arrangements can come, and you might develop an account-based payment method for one particular sector. I'll develop one for another one, for airlines or something, right? And different payment methods would emerge, and then over time these would consolidate, right? And so I think if I was to choose between, would I like to see a regulatory-led environment or a market-led environment, I'd be very much on the market-led side, and I'd be kind of saying, so I think, but that's not to say that there shouldn't be regulatory intervention from time to time either. Right?
Yeah.
So it's just a question of being really careful about how we do that. And should we pause maybe and take stock every now and again and make sure that from a regulatory perspective that we haven't gone too far, that we're not, it's really, it's kind of useful and important sometimes when a regulator says this is what you should do.
Yes.
But maybe not this is how you should do it. Maybe they don't need to go that far. Right?
Indeed.
So how do we manage that? And so I think the next year will be instrumental in the future of open banking payments in the UK, as the FCA and the PSR together have formed a group called JROC, which is the Joint Regulatory Oversight Committee. And as that group, if actually creates a new future entity that's going to oversee, the standards and all of the issues in this area, that will come to a more concrete substance, if you like, will form around that over the next year or so. Then that's a good thing.
Yes.
And there's two big thorny issues in open banking still in the UK, which is around, should people be told that they have to participate in these arrangements, institutions, or should it be optional?
Yeah.
And when TPPs then, which are the PASPs, the third parties, use their APIs, should they get revenue or not? Should they be paid?
Yes.
Right? And so these are unresolved issues at this point in time, right? And there's obviously different views from different people on it.
Yeah.
And so it's kind of like, well, I can access my account through my mobile phone, through my web browser on my computer. I can go to a branch. Now, if I want to access it through a third party, could that inherently be more expensive for me?
Yeah.
Right? Or should I have to pay a premium for that? Or should that be free, right, to me as well? So there's a whole host of issues that we haven't resolved as an industry. And I'm looking forward to those conversations, because I think, and in fairness, the UK is in a really, it is in a leading global position on open banking payments.
Mm-hmm.
It has really taken the bull by the horns, as they say. And it's, I think the work that's going on at the moment will bring it to a certain point, and then I hope what will happen is the market will then take over, and the market will then drive it forward. And you'll see these applications and solutions come to the market, and then people will say, yeah, these are the ones we like, these are good. But a few little problems to be ironed out between now and then.
Indeed, yeah. Fantastic.
Yeah,
well, look, it'll be interesting to watch those developments.
Sure will.
And I guess moving or taking a step back, you've been in the payments industry, for many years now. I guess you were one of the pioneers of the payments industry. I think it's fair to say. But are there any other sort of trends that you're seeing that worth taking note of?
It's interesting. Like, there is paranoia about access to the account, and regulators are, as we've discussed, are getting involved in these conversations, but so too are governments.
Yes.
Right. And in the UK, you've got a national payments vision work underway with HMT. And back at home in Ireland, there's the Department of Finance are running a national payment strategy.
Yeah.
Where, it's interesting to see governments producing, strategy papers in the area of payments.
Yeah.
Now, there's, very important issues like access to cash, for example, for vulnerable customers and that type of stuff in there too, which needs to be addressed.
Yeah.
But also embedded within these payment strategies and visions is account-based payments, and is this trend towards, people paying from their accounts. So I think it's really interesting that that the developments, if you like, in the industry, as you say, as a whole, that you now have regulators, you've got the government involved. You've also got the concept of the central bank-backed digital currencies. So both Europe and the UK are thinking of the digital euro, the digital pound.
Yeah.
Right?
Yeah.
Still has a little bit of a way to go, but not that too far. It's pretty advanced in terms of its thinking. And like the ramifications of bringing in a digital currency is like no one's really thought that one through just yet either.
Yeah.
And what does that do for everything else that you've already have? So there's many years of turmoil and fun ahead, that's for sure, right? We're going to have great fun. And then there's also, in SEPA land, they've got a new scheme, which is the Payment Account Access Scheme.
Okay.
Which is another way of basically accessing another set of standards to access the account in order to be able to make payments from it. So there is a plethora of different activities and initiatives all going on involving accounts and payments from those accounts, And I think that's what's going to make it fun for the next couple of years.
Indeed.
Yeah.
I know that the podcast, is about fire, but it could also be titled, an encyclopedia of payments, and what's going on during 2024.
Yeah. And I think, and that's where and why I'm kind of very happy with, where we're going with fire. We have a philosophy of growing slowly with fire, which mightn't be the same for every fintech that I know of, right? And we do that on purpose because, for me, retaining control is really important in your business, particularly if you're a regulated business. And control has to come before growth, in my view, in a fintech. It's not a view that I know everybody shares, but for me, it's a hugely important. And I think it is because we take that approach. That's why we've won some of the customers in fire that we have. As I say, these incredibly large financial institutions wouldn't be using us if they thought that we were cutting corners with regard to our controls, So we're really fanatical about making sure that the control of the business remains, sacrosanct. That you can't compromise on that, right?
Yeah.
And I think the industry has a little bit of a way to go in that regard. And I think, as firms have failed over the last year or two in the sector. It really is not great for the sector, you know. So we need to find a way to make sure that, and so the regulations are changing again.
Yeah.
So I mentioned earlier on to you about, you know, advances in technology and advances in regulation create these opportunities for payment firms to do things in the market, right?
Yep.
And now the regulation's due to change again with PSD3, which is the Payment Services Directive. So we're only kind of getting used to implementing PSD2, and already like PSD3 is on the way. And that's going to change the landscape yet again.
Yeah.
And, you know, potentially put more obligation on the payment firms, which is fine. But also at the same time opening up maybe more access and more innovation opportunities in the market. So, yeah, no, it is like it's always been kind of very exciting in payments, though, you know. But and this is, I don't know, is it more exciting, less exciting than what it was back in 2000? It's hard to say. Do you know what I mean? It's as exciting, is what I would say. You know, and there are like the beauty about payments as well is that you can have a niche business in payments, like doing a very, very small thing between two players in the chain, and you can still be very large.
Yes.
Because the payments are just so vast.
Oh,
you know,
it's huge.
and there's so many of them happening all the time.
That's
like
right.
so you know, you don't have to be all things to all people in the payments industry. Just pick your spot and do a really good job and do it well, and you know, and do it with good controls in place, and then meet your obligations, and you know, and scale up. You know, and you know, fine.
Yeah. I think it's a fantastic point about sort of identifying that niche, identifying the pain points, and solving it really well.
Yeah, it is, isn't it? It's kind of like, because in the end of the day, like, you know, you're not going to sell something just because you want to sell it. You know, a friend of mine calls it. You know, he goes in as a VC, and he goes into companies, and he says to the other VC, like, did you meet the founder? Oh, I did. And did you get the feature vomit? You know, where the founder just exposes all the features of the product, but never once described why anybody wanted to use it.
Yeah, that's it.
You know, and it's that, and sometimes finding the reason why people want to buy your product can be hard. You know, it takes time, and it's not that easy. It's easier to make something than it is to sell something.
Indeed.
You know, much easier, and selling is you know, I've always loved sales, and I've always loved selling. And selling is an integral part, obviously, of being a founder of a business. You got to be able to sell, but selling is not easy, and understanding the reasons why people want to use fire was something that I think we're constantly learning that.
Yeah.
And you know, and we're coming across use cases now, and I haven't thought of those use cases.
Yes.
You know, and I'm saying, wow, like, so you know, get yourself a platform, and then try and understand where you think you can solve these problems, meeting with customers, meeting with prospects, having those conversations to see, do we solve that problem? And thankfully, you know, as I say, so far with Fire, we've about, I'd say, in around 3,000 customers or so who use Fire on a very regular basis, and processing very, very large values as well through us, you know, that we're finding the sweet spots, you know. But you have to persist sometimes. Indeed. You know, and that it can take time, you know, for your business and for the people within your company to learn where those sweet spots are, and then to be able to communicate that message in an effective way so that you can find more customers, you know. But that's the joys of being in business, right?
Yeah, that's it.
That's what it's all about.
That's right.
In the end of the day, you know, yeah.
Yeah.
A friend of mine told me years ago, he said, you're either making the shit or selling it. And if you're not doing one of those two things, you're an overhead.
Yeah, that's right. That's right. I love that saying. Yeah. It's a good one.
Yeah.
Colm, I guess you've kind of preempted me in terms of, you know, sharing takeaways with the audience. They were, you know, two really great pieces of advice just then. But, you know, is there anything else that, you know, you'd like to share with the audience as a key takeaway?
I think, like, it's just there's ups and downs, and if I was like looking at Realex and Fire and all the things that are happening in the market with regulators and trying to find customers and so on, one of the things that I learned very early was that you can have your best day and your worst day on the same day, right?
Yeah.
And that things can change very quickly when you're in business like this, and when you're starting a business or scaling a business, growing a business, and you can get a phone call at any minute, and it can completely transform what you're doing.
Yeah.
And that can be hard, And so I think persistence is really important. And you get great, I certainly extract great consolation from the idea of having a vision that people buy into, right? And that if we can articulate a vision as to what we want to be, so we want to be a digital payments business, you know, so helping people get paid and helping people with their payouts and go digital with their payment process. And everybody around me in the company believes in this too, and believes that we can do that and that we can be one of the biggest in the UK and Ireland. Then you feel okay, right? Because you know you're not alone, I suppose, in that. So I think, you know, for me, the biggest lessons over the years have been coping with the oscillations and the ups and downs, right? And how frequently they can occur, right, is one thing. And then trying to be persistent and try to keep going by really latching onto the vision of what this company could be and what this company might be like. You can imagine this company in 5 years' time and you see something really exciting and something really powerful, and you kind of say, that's where we'd love to be. That's where we want to go. And people will join you on that journey.
Fantastic. That's super special. I mean, you know, to have people working towards that common goal, isn't it? And doing something which is transforming other businesses, solving problems for them.
And I think that's the joy of being involved in an early stage company, right? And being involved in smaller companies, you know, because you see a lot of people nowadays, and they maybe work for very large firms, you know. And there's great opportunity in those too. But I think, you know, we certainly seem to attract. It's very important to bring in people into your early stage or your scaling up company who want to be in that type of company, you know, who like being in that, you know, here's a blank page, go sort it out, you know. Because some people can be terrified by that. Others like relish that idea of being in charge, not just of what they do, but also how they do it, you know. While in some companies you're told how to do it, you know. So it's important to have the right people on board. But you're spot on. When you get a team of people, you know, trying to achieve a common goal, there isn't really nothing more powerful than that. And I think the post-COVID era has had an impact on us all with regard to that, you know. And post-COVID, it's been hard to get, you know, that sense of community that you probably need in a small business and in a scaling business, you know. That sense of community is really, really important because we are bound together by the strategy of this business. We all buy into the vision and the mission. Like, we buy into these goals. We want to achieve that. We want to end up in that destination. That's where we want to be. But if we're not spending time together, you know, at least, you know, most of the week, in my view, I think that can compromise that community a little bit. And I think the community isn't as strong as maybe as what it was before in a post-COVID world. So I think that's something that we also need to kind of grapple with, I suppose, with people. And, you know, the years ahead will, I'm sure, sort that out. Do you know what I mean? As everybody learns to live in this way, where there is an element of remote working, which is inevitable, and it is a part of, you know, business life today. So you know, and so how best to manage that, particularly for smaller firms, I think is really important.
Indeed.
Yeah.
Fantastic.
Yeah.
Colm, thanks so much for everything that you've shared today. You know, we've covered a great deal. Looking forward to seeing how Fire's journey progresses amidst, you know, regulatory changes and market-driven forces. It'll be very exciting to see, you know, what's next.
No, Lucas, thanks. Great to see you today, and many thanks for having me on.
No, you're most welcome. Thanks so much for joining me, Colm.
Thanks.